The World Bank has released its India Development Update, which explores what the forecast for the Indian economy is, how the Indian economy is currently doing, and what are the challenges ahead. To help us understand all these multiple facets, we are joined by the India Director of the World Bank, Mr. Auguste Kouame. Thanks very much, sir, for joining us this morning. And my first question to you, that you've released the India Development Update by the World Bank, and just help us understand, for a layman to understand, how is the Indian economy doing and where do you see it place among other South Asian countries?
Thanks, Priyanshi. Thanks for having me on your program. Short answer to your question, Indian economy is doing very well, even compared to the best performing countries in the world and in South Asia in particular. Last year, India's economy grew at 7.2%, which was the second highest growth rate among G20 countries. We're forecasting India's economy to grow at 6.3% in fiscal year 23-24, which is a slight reduction from last year's strong growth. But this slight reduction to 6.3% growth still makes India will still make India one of the fastest growing countries in the world. Now, we should remember also that we are in a world that is in a very difficult place today. We have a lot of headwinds. We have geopolitical tensions, we have high inflation, we have high interest rates, which makes it very difficult for individual countries to grow faster than they would have under normal circumstances or within a benign global environment. So within that, I would say, unfriendly global environment, India's growth forecast of 6.3% is quite an achievement if it were to be realized, and we believe it will be realized. We believe India will hit that forecast. In the long term, there is possibility for India to grow even faster, and I'll be happy to talk about what it will take for growth to be even higher in the long term. But for now, let's remember that India is one of the fastest growing economies, at least among major economies in the world, and including compared to other South Asian countries.
Right, and the last point that you mentioned, that we are capable and we have the potential to grow even faster than this rate. So what will it need to be able to achieve that? Of course, you've mentioned we're the fastest growing, and that's great. But we are also the most populated country, which means that the pie is bigger, but there are so many people who want a slice in that pie. Yes. And India's income inequality is one of the steepest across the world. So do you think that income inequality is a major challenge for India, that while it looks great that we are the fastest growing, our economies, I mean, overall the figure looks great, but we are seeing that the top 10% of the country holds more than half of the country's income, which shows you how skewed the benefits of economic growth are. So do you think that's a challenge for India?
Well, it will be a challenge for any country to have this kind of inequality. It will be a challenge for any country. And, we all would like to see everyone rise above poverty, right? And that would be the ideal. And I think we should pursue that. There is no world where there is no inequality. Yeah. But the goal should be to reduce that inequality to the bare minimum. So in the short term, inequality is a challenge. It's not a good thing to have. In the long term, it will be a challenge also, because high inequality today makes it difficult for the economy to grow faster, because inequality, it has been shown through research that after a certain level, inequality is detrimental for growth. Now, there was an aspect to your question which suggests that India needs to grow faster and should grow faster and can grow faster. Yes, India can grow faster. India has strong fundamentals. India's macroeconomic framework is very strong. India has a demographic dividend, or potential demographic dividend, with a young population. 65% of the population is less than 35 years old. In a large population, this provides a strong pool of potential workers. If well educated, if well skilled, and if put to the right jobs, they can power the economy to grow at double digits. India wants to become a high-income country by 2047, which is a fair ambition. It's achievable. Our data shows that for that to be achieved, though, India needs to grow at 8%. Right. And 8% is perfectly doable. We're not talking about 10, 12%, which some countries have achieved in the past, by the way. 8% is perfectly achievable. India has achieved that in the past, maybe not for a long period of time, but India, we think, could achieve 8% and sustain it for about 20 years so that it can achieve high-income country status by 2047. For that to happen, in addition to the strong fundamentals that I talked about, macroeconomic fundamentals, young population, very good public investment being now rolled out, there are a few other things that are needed. The first is the private sector investment needs to pick up because countries grow when the private sector really grows. Right. The government is here to facilitate that process but cannot substitute the private sector's growth potential. It can crowd in, the public investment can crowd in private investment, but ultimately private investment has to be powering the growth process. Now we're seeing a lot of growth coming from private consumption. The next stage will be to, and also a lot of growth coming from public investment as well. But the next stage will be to see growth coming also from private investment. For that to happen, there are a few things. In addition to public investment, you need some policies to stimulate private investment. You need policies to make it easier for the private sector to have access to land, for example, to hire people more easily, to have international connections through the global value chain and through import and export more easily. So there are a number of reforms that could facilitate that. The second big thing that would be needed for growth to reach 8% and be sustained at that level is on the employment side, on the labor side. We hear that firms sometimes struggle to find the right skills at the right place at the right time. Now, there are a lot of skills in India, a lot of Indian skills also globally. With no skills, there is no dearth of skills. But maybe the right skills are not in the right place at the right time. So investing in skilling through the ITIs or through skill centers in states, including in states that are struggling to produce those skills or that are struggling to retain them, investing in that will make it easier for firms to also go to those places, those states, and invest there. And those places may offer the highest possible return on capital if you have the right skill. And that will add to India's growth potential in the long term. So these two things, private investment and the skill side, if they come together, we think that it will be very easy for India to achieve 8% and sustain it.
Right. So while we focus on the potential that the Indian economy has, currently, if you look at the state of the Indian economy, you've said that it's doing pretty well. But if I ask you this for a simple understanding of our viewers, if you have to point out 2 or 3 pain points for the Indian economy currently, and 2 or 3 things or aspects that are going right for the Indian economy. So if I have to put it simply, what's going right, a couple of points on that, and what's going wrong with the Indian economy currently?
Okay, so what's going right? I mentioned earlier, India has a very strong macro framework. India's macroeconomic fundamentals are very strong. Various aspects. There is a strong fiscal consolidation path that's happening, helped by GST, which is a very good reform. It's now producing healthy revenues for the government, which combined with a fiscal discipline on the expenditure side, especially on the government consumption side, is helping achieve fiscal consolidation while still maintaining space for more public investment. This is very strong. India has a very strong reserves, foreign exchange reserves. We hear that, or we know data tells us that it's one of the largest foreign exchange reserves in the world. This means that the global headwinds and the volatility that we see in the world that put pressure on the currencies, India can manage that a bit more easily than countries that do not have that kind of reserves and that kind of cushion. Similarly, India has a very, the financial sector in India is improving. The strength of the financial sector now compared to a few years ago is like night and day. The banks have improved their balance sheets. The corporate sector, by the way, has also improved its balance sheet. Non-performing assets have come down now at 3.3%, which is very healthy. And related to that, you see credit growth picking up. So there are a lot of positive on the macro financial sector side. It's very strong. I would say second thing that is going really well for the Indian economy is, well, it's hard to limit the list to two, but
you can take the liberty to go on.
But you know, public investment is very strong, and it's really very good, and it's needed. India has big ambition for, you know, the national investment pipeline is impressive. It's huge. It's very ambitious, and the government is showing that through high public investment, you know, India can march toward achieving the goal of the national infrastructure pipeline. Of course, private investment will need to be crowded in at some point and fairly quickly. A third thing I will add is the services sector. You know, we all tend to say, and I will still maintain that, you know, countries need a strong manufacturing sector, strong industry to grow. Yeah. But we also can do very well with a strong services sector, and India has been doing very well. The services sector is growing fast and is a top performer on the export side. And linked to that is India's success in IT and technology and the DPI, the public, the digital public infrastructure that is supporting a dynamic and modern services sector, especially on the export side. The world knows India for very good services export, supported by DPI. Maybe I'll close by saying that digital public infrastructure is not just for export. It has also helped improve services or service provision by the public sector. It has helped reach many vulnerable people, especially during COVID, providing them with public support, public assistance, and it has also helped improve financial inclusion, which is very important. So a lot of things are going on well. In the second part of your question, I wouldn't say that there are things that are going wrong. I will simply say that there are things that could be improved. The issue is India's growth is not very, India's income per capita is not very high yet, as you mentioned earlier. You know, it is at a low middle income category. You know, middle income is good, low middle income is good too, but India wants to become upper middle income country, which is fair and actually normal, and India wants to become a high income country. But for that, as we said, growth needs to be higher than 6.3%, especially if India wants to achieve those goals by 2047. So what can be done better? What can help? I mentioned a few areas, so they're not going wrong, but the areas that could do better: private investment, on skill side, female labor force participation. I think for me, it's the lowest hanging fruit, and in fact, it's perhaps the area that hurts the most growth in India, because India's female labor force participation is at 25% according to some statistics. According to the same statistics, the average is 50% for countries at India's income level. And we estimate that if India's female labor force participation were to grow from where it is today to reach the average for India's comparators, that alone will add 1 percentage point to growth. So meaning, instead of 6.3%, we will have been forecasting 7.3% or 7.5% growth rate, just by doing that.
Just if women have their equal representation in the workforce?
Not even equal representation.
A higher representation.
Higher representation to match the level that other countries at India's income per capita have. If women were to have equal representation in the workforce, female labor force participation in India will be more than 60%, which is where male labor force participation is today. That will add maybe 2 percentage points to growth. Just by that, but just reaching equality will mean India will reach the 8% growth rate that is needed. There's some risks, there's some safety issues, there's some safety factors which makes women choose not to work. So if those can be addressed, then the supply of labor from women will increase dramatically to reach parity maybe, and then the economy will grow at 8% without additional effort. And of course there will be additional effort too from the private sector, which means the economy might grow even at 9%, who knows.
Let's talk about the cost of living crisis and inflation now. That is a major challenge, not just for India, but for major economies around the world right now. If you could explore a bit on whether enough has been done. We know the Reserve Bank of India was consistently raising interest rates the last year, but for the last 2 meetings they haven't, and they say that inflation is coming down. But for the last 2 months we've seen it has been above the 6% target of the Reserve Bank. From the government side there have been steps, but they've not been steps that will give direct benefits, as in tax cuts or excise duty cuts on fuel, which we've seen in the past few years, which have been the government's decisions earlier when we've seen such skyrocketing inflation. So do you think enough has been done on inflation front, both from the RBI side and from the government side, and do you think more can be done?
What we're seeing in our numbers, in our data, is that yes, inflation picked up in July.
Yeah.
And in August it went down a bit, right? So maybe there is a trend of decline. So if I were a policymaker, maybe I'd want to wait a bit before taking drastic actions. And secondly, I would think that one should look at what feeds into inflation, right? And inflation on the consumers see inflation, it hurts. Nobody likes inflation. As a consumer, I don't want to go to the supermarket and see higher prices today than I saw yesterday. It doesn't make you feel good. It makes you feel like, why are they doing that to me? So nobody likes inflation. But we need to look at what is feeding into inflation. And when we look at our numbers, what we see is that on the producer side, prices are low. So the wholesale price indexes have a different dynamics than the consumer price index. So hopefully, perhaps in the next few months or so, because wholesale price indexes are low now, maybe they will feed into reduced inflation on the consumer side, hopefully. On the other side, we see that global commodity prices, which improved recently, may pick up again. We're forecasting oil prices at $90 a barrel. So that could feed into higher inflation on the consumer side. So there are a lot of dynamics and a lot of uncertainties. What I might be able to say is that we are in a high inflation environment globally. Right. It will take a while for global prices to come down. I don't know how long that while will be. It could be a few months, it could be a year. And all countries, including India, will see the impact of that.
The cost of living crisis or inflation is not just an India problem. And 2024 is a very important year, both for politics and economy, because the elections coming up in India, in the United States, in Canada, in Pakistan. So would you, as the country head for the World Bank here, say that inflation and price rise needs to be a priority ahead of these very important elections, which will change how these countries are governed, specifically for India?
For us, whether there are elections or not, inflation, because we know it hurts the poor more than the rich. In a world of inequality, inflation hurts everyone, but it hurts the poor more than the rich. At the World Bank, we think, therefore, that inflation should be a concern. And by the way, it's a fact that we don't talk much about, but we need some inflation. And you may be surprised to hear that.
No, you're right.
An economy that has zero inflation or negative inflation, it may be good for a year or two, but it's not good for the long term.
Yeah.
You need some inflation to create incentives for savings, for growth, for investment, for many good things that we get in the economy.
Yeah.
But you don't want too much inflation. Okay, you don't want too much of it. So we think at the World Bank, high inflation is really not good. First, because it hurts the economy. It creates risks for the future. It can detract from growth. But more importantly, because we think inflation is regressive. Regressive meaning it hurts the poor more than the rich. And this is regardless of whether you are in 2024 or election years or not.
And you've said that you don't want to comment on politics. I'll keep that aside. But one aspect that is related to politics, but that is a very important economic aspect for any country in an election year, is the issue of freebies. Do you think that's a good economic decision, not going into the politics. But of course, you would know that in elections, you have parties announcing that we'll have free travel for women, we'll have free ration.
I'll take free travel for women anytime.
Yeah, no, but yes, more of these measures are announced, and free travel, they have their advantages, that it's a security move for women, and free ration, free health services, which we see is the case in developed countries like New Zealand and other countries. Is it a good economic decision to spend that kind of money on these so-called freebies?
What I think is a good economic decision is the fact that there is a cap on states' fiscal deficit, and the cap is 3%. So that's good, because it means the state cannot
spend
more and have a bigger deficit than 3%. So, this is a good decision. Beyond that, what they do within the 3%, it varies from state to state. State may decide to invest in roads or invest in electricity power plant, in renewable energy, or provide more social services because people actually need it. Right. Provide more protection for women, which is good to have. So it depends on what the states need, and I don't know whether these needs vary from election year to non-election years or not. But I think this is a state level issue, as long as the 3% fiscal deficit cap is maintained. I'm not saying that we should be in a country where people get everything they want regardless of effort they make. Sometimes supporting social services can be good, because you need that to create more opportunities for the weaker people among us, for the lower income people to have a chance to also contribute to growth. And sometimes it's also important to provide infrastructure investment that may look like it's benefiting from rich people, because you may build airports or roads that can be used only by high income people, but this may also be good to power growth. So I don't have a blanket answer to say investing, providing social services or freebie is good or bad. It really depends on where the states are.
Yeah, that's fair what you say. Thanks very much, Mr. Kouame, for joining us. So as you heard, it's the World Bank Country Director, Mr. Kouame, telling us that the Indian economy is doing well, but there are several challenges and a lot of aspects that we still have to work on to be able to achieve our full economic potential.